Another day, another dollar. March 11th, 2026. Let's talk about the market right now and then go over the trades I took today and see how the strategy came into effect. We got a lot going on in the world, but in the stock market, in Nasdaq, as you know, we've been consolidating for some time, and we're still doing that. We're still within this range right here, and we're going on a month and a half. About 45 days we've been in this range. Momentum, nothing changes. The buyers in the Nasdaq are holding strong. They're not giving up ground. It's literally a tug of war. We don't have any directional bias on the daily level right now, and we haven't for many weeks. And then the volume, still majority buyers. As volume tapers, you expect to see stalling if we are going to see another push up. So if this is going to go higher, if this is going to make a recovery soon, then we expect to see volume falling over the next week as the price remains in this level. That's what we expect to see if we're going to push higher in 2, 3, 4 weeks. Now, going over the trades I took today, we took a few trades and we're going to go over all of them right now. The first trade was right at the open. Why did I take this trade right here? Well, we have a volume confluence. Look at this volume confluence right here. We're on the right side of the momentum. We're going up on the momentum with a volume confluence. What is our 5-minute data showing us? Well, our 5-minute data is in the green and going up. Okay, well, let's look at the 15 data. Okay, 15 data is going up. These are all the momentum indicators for these time frames. Okay, what about the 30? 30 is going up. This is a full alignment. The 2-hour, yes, we're going down, but the 2-hour is not as important as the 30, 15, and 5. These are the three we need to be in harmony. When these are in alignment in terms of momentum, that is when probability is now in an asymmetrical cloud of realities. It's not a 50-50 at that point. It's more like an 80-20 at that point. So we have higher alignment, higher time frame alignment. I see this pullback. I see this sell-off. I'm watching and waiting for the momentum to shift. Here the momentum starts to shift. Okay, we do not get a volume confluence, so I didn't enter yet. This very next bar, we do get a volume confluence, so I entered here. Now this would have stopped me out. This would have been a loss had I not applied the last candle rule. So the last candle rule states, if this is our entry candle right here, which it was for this trade, if it's a small candle, look, there's big candles. Okay, and then there's tiny candles. Do you see the difference? Look, big candle, small candle. See? So the candle, the last candle rule says, if our entry candle is a smaller candle, then just use the previous candle as your limits. Don't bother with trying to guess. No. Here's the entry. Stop loss is going to be at that last candle right there. So that first profit target, which is this right here, this first line is the profit target. We hit that profit target, and that was a wonderful win. And the runners, because you don't exit the whole position right there, you just exit with some percentage, 80-90%. The remainder of that position continued running for more and more profits, so that was a good win. Good trade. First trade of the day. The second trade of the day was right here. Yep, right there. And this was also a win or a loss? Let me double check. This was a win, yeah. We entered here. Why? We have a volume confluence. We're moving down. Red means shorts. We're moving down and we get a volume confluence. Okay, what about our higher time frames though? 5? Yeah, that's giving us permission. What about 15? Yep, 15 is giving us permission. 30 is giving us permission. And you remember what the 2-hour was doing from before. The 2-hour has been in a downward bias. So this is a no-brainer. You take this trade all the time, no matter what. You size up a little bit into these kinds of trades, okay? Because you've got a full alignment going on. Now this barely hit the profit target. Well, I say barely. It penetrated through by a substantial amount, by probably 20%, 15% past. So yes, it was a win. But then we did have some fighting and some buying. And what do you think this was buying and fighting over? What do you notice right here? What do you know? These lines, this is the previous market day's low. This is the pre-market low. Notice how they're super close together. This is a high-powered critical level, a very hypercritical level. Notice what happens here. Notice what happens here, okay? Anytime you have two critical levels that are extremely close to each other, you're going to have a lot of price action going on at those levels. That's why analyzing previous market and pre-market levels, that's why that is so crucial for knowing the highs and the lows. Next trade on the day was right here. Rather, it was this one. This bar is off by a little bit. We're going to move that and adjust that right here. And I believe I was on a 2-minute chart at this time, so we're going to go to a 2-minute chart and look at this setup. And here we are. So we have a volume confluence. We're on the right side of the momentum. The 5-minute is now tapering down. Bear with me. Okay. The 15-minute is not going with the trade. We're going up. This is horrible. I should not have taken this trade. What was I thinking? The 30-minute is also tapering up and in the green. So why am I taking this trade then? Why did I take this trade? This was not a trade to take, and I deserved the loss. Entry was right here at the close of the candle. Stop loss slightly above. That immediately hit my stop loss. Immediately. Horrible trade. Why did I take that trade? You got to wait for the alignment. Next setup happened. Right, what do you notice right here, by the way? Do you see this extremely huge candle? I mean, that's crazy if you're asking me. I mean, look at the volume. Now, this was correlating with, this random monster volume spike right here and this huge adjustment in the price. Why did that happen? Well, it was because of the CPI data came out today, and it's Wednesday. And when CPI data comes out, when other FOMC meeting happens, whenever any of these significant events occur, you're going to see some interesting anomalies like this. So right here, we're building pressure to the downside. Okay, before this entry, my entry was right here on this next candle. Before my entry, we're building downward pressure. Okay, but the 15-minute is working up and the 30-minute has been working up. But then I see the most spikiest volume candle. I see the most aggressive. I mean, this price action was going like this in real time. Like I'm actually showing you what it really looked like in real time. I mean, it was going fast. This was an anomaly. This is an important event. You got to be able to recognize these things when they're happening. So I entered before the candle closed. I entered as it was happening, which is a skill that I've been working on. So I entered about right here. Stop loss at the top of the candle. That first target was hit. It's hard to see because it's overlapping with that blue level. But this was the first profit target right here, that purple line. We hit that easily. So that was a good trade. Good win. Very good win. I'm glad I finally caught that. Now, that was all of my trades for today, but we're going to go over one more thing that occurred. Notice, see these squiggly lines? These are me showing that, yes, we were in fact in a wedge. We're in fact consolidating. There's pressure building on all directions. The price doesn't want to break this double critical level, and the price is stuck underneath the VWAP, and it doesn't want to break this wedge that's forming here. You can see it with your eyes. You don't need to draw lines. Look at the wedge. So one play I missed. I wanted to take this so bad, and I almost did, but I just hesitated, which is not good. That's another skill to work on as a developing trader. So right here, what do you notice? Do you notice anything interesting right here? What do you see? A volume confluence. We just ticked up. We're not going down anymore. Down, 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 down. Boom. Tick up. Volume confluence. This is the final 10 minutes of the day. This is where everything gets crazy. We're already in the green on the 5. Green in the 15. 30 in the red. So that's not good. That's a warning sign. But if the 15 is aligned in the green and the 5 is aligned in the green, and then you get the volume confluence on the right side of the MACD histogram momentum shift, then that is a trade to take. And that's a trade I wanted to take, and this was the candle right here. Volume confluence on the right side of the momentum triggering. Enter at the close of the candle. Stop loss slightly below. Look at that win. Look at that win that I missed out on. That's all right. Not a big deal. At least we saw it, and we almost pressed the buy button, and we almost got in, and that's what matters. Is we saw it, we registered it, we understood it, we were watching it. That's what matters. All that being said, I'll see you in the next one. Take care now.